Naira appreciated against the dollar by 4 Naira at the parallel market on Monday as the Central Bank of Nigeria's decision to discontinue sales to FX to Bureau de Change operators enters its first week today. Chioma Udu is an FX dealer at GTBank. She joins me now for a review of the fixed income and FX markets in Nigeria. Thank you so much for your time today, Chioma. Chioma, it's been 1 week now since we've seen this new FX policy announced by the Central Bank. How have we seen the Naira play out so far in the parallel markets?
Well, we've seen the Naira continue to revalue in that space, starting from a high of 525. We're currently at 510. This is as a result of the consistent, supply of FX from the central bank. The central bank has supplied FX to banks, and banks now are able to, take care of the retail demands of customers from the official market.
All right, but how have we seen the dynamics at play impact the other windows, like the INE window?
Well, the INE window has been stable at about 411.24. That's the NAPEX 16 for yesterday. Well, the demand in that space is also supported by the central bank as they consistently come into that space to, sell funds, intervene from time to time. So, well, the rate in that space is quite stable for now.
But then, looking at how the central bank interventions with this new policy, how is this playing out with the reserves?
Well, the reserve is currently at 33.4 billion right now, and we expect that the central bank is going to continue to support this intervention from PCA, invisible, and also direct intervention into the market. Well, we have 33.4 billion, and I think it's enough estimate to manage the demand we have right now in the system.
All right, Chioma, let's look into the yields and the fixed income market, and how do you expect them to trend going to the rest of the week?
The fixed income space has been quiet. Low activities in the short end of the curve, with more activities on the NCD bills as we see retail interest in that space. For the T-bill curve, the 1 year is currently trading at about 7 to 8%, but activities in the short end remain flat. For the OMO bills, next to nothing, no transaction is taking place in that space. For bonds, it's been quiet, but bearishness is witnessed across the mid to long tenor. Clients are not ready to buy now. They're waiting for when rates will trend up. But we've seen a lot of activity. We've seen activity at the short end. This is as a result of the maturity, the July 21 maturity we had last month. So we're seeing a lot of customers trying to reinvest short term as we wait for an expected increase in yield.
But looking at how things played out last month, we saw that liquidity was at the center of the picture. Going into the month of August now, looking further down the line, how do you see this playing out in the market?
Well, the money market is about 168 billion up. Rates trading in that space is in the range of 3 to 5%. We do not have any funding needs for today. The inflows, we have some inflows come towards the end of the month, which includes back payments, then all producing states, back allocation, month-end transaction flow, contract payments, and salary payments. That helps to boost the liquidity in the market. Well, we have a normal maturity of over 19 billion that we expect to come in today. That will give some liquidity boost to the market. And barring any funding needs, we expect our rates is going to trade by at the range of 3 to 5%.
All right, but for you, though, looking at the market this week and how it's going to pan out, what's that one thing that you are looking forward to?
I'm looking for, some activity in the fixed income space. I'm looking forward to see most of the liquidity in the money market, drive the activity in the fixed income space. Furthermore, with the intervention from the CBN, we expect, I'm looking forward to see more evaluation from the Naira in that space in the parallel market.